Once again, thank you everyone for joining and welcome to this event. I'm Zarina. I'm a product and community lead at Seedstars. And today, Seedstars mentor Mark, together with Nakul Gupta, will be hosting a discussion on crypto and emerging market fintech. Mark is a vice president of business development at Stellar Development, and Nakul is a product manager at Coinbase. Before we start, I just want to share quickly the agenda. So now our panelists will have a few minutes to share some information about themselves, to introduce themselves. And then for 20 minutes, we will have discussion. The questions are very interesting that Mark shared with me. After the discussion, we will have 15 minutes of Q&A session. Just want to let you know that during the discussion, if any questions will appear, please feel free to drop them in the Q&A section. And during the Q&A part, we will try to answer to all of those. So now, Mark, Nakul, the stage is yours. Please feel free to start whenever you're ready.
Yeah, sure. Thank you very much. And thanks for organizing this, Serena. Really appreciate it. And thanks, Nakul, for agreeing to come on. So Nakul and I have known each other for a little while. We're both involved in Next Billion Advisors, which is sort of a referral network for advisors for companies in emerging markets with a heavy focus on fintech. So basically any startup, whether a Seedstars startup or otherwise, wants to get advice and have ongoing advisors, they can go to Next Billion Advisors and see if they want to use one of our advisory councils or directly use an advisor. And so, yeah, I thought maybe we could kick off, Nakul, with you giving a little bit of your background, introducing yourself, letting people know where you're coming from.
Yeah, thanks a lot, Mark, for having me, and Zarina for the introduction. Really here. So I've been operator in the fintech and crypto space for the last, 4 to 5 years. So currently, I'm a product manager in Coinbase, leading some of our institutional and retail onboarding and growth products. It's been really fascinating, like being here at Coinbase and seeing how we're evolving. Before this, spent a couple of years at Venmo as a lead PM, launching some of our products like the Venmo business profiles, working on open banking, as well as looking into our crypto initiatives. And before that was in consulting in BCG for a few years, again, working in financial services space. It's fascinating. 5 years back, we were trying to, work with India's largest bank in helping them launch a fintech lending product. We were doing partnerships with Uber and Amazon at that point. It's really fascinating how much the market has shifted in the last 5 years. We were literally, underwriting to these drivers, and now they're dedicated companies worth billions, doing that. So it's really fascinating. I can speak more to that, but yeah, back to you, Mark.
Yeah, sure. And just by way of introduction on my side, I started my career starting a company in London, focused on travel search, and that brought me to India, where I actually launched a team. We directly started a company in India, a subsidiary, and hired a team of 250 people. And I actually lived in Gurgaon for 3 months a year for about 5 years. Seeing it grow in 2000 from a farming community to what it is today, which is a massive city and outsourcing hub. And, in that time saw the massive gap in digital access and decided that's something I really want to focus on. So after I sold my company in 2006 and joined Google, focused on emerging market mapping. When I joined Facebook in 2010, also focused on emerging market sort of access through their various apps and programs. And more recently, co-founded a number of companies, one of which is PayJoy, which is focused on credit in emerging markets. And that PayJoy experience, where I found myself in emerging markets, really drove home the gap in founder access to capital and know-how. I think there's no reason why someone in Lagos or Jakarta shouldn't have the same access to capital and know-how that people do within 100 square miles of San Francisco. And that's really what I wanted to solve with Next Billion Advisors. And I think events like this should really help as well. And currently serve as Vice President of Business Development, as you say, at SDF. Stellar is one of the layer 1 blockchains, similar to Ethereum and Bitcoin. And you may have heard of things like Solana and Algorand, so in a similar category to those. And so, yeah, maybe to dig in a little bit, I think the first thing I wanted to ask because we're talking about emerging market fintech, is the financial inclusion narrative in crypto actually fact? I think it's a narrative that has been discussed quite a bit when crypto first launched, that this would be something that would bring a lot of financial inclusion in place. And I think the counter narrative I've heard is this is actually just a way for rich people to get richer in actual fact, and there's not a lot of financial inclusion happening. And so, yeah, Nakul, I would love your take on this, and I obviously have some points of view as well.
Yeah, absolutely, Mark. I think this is very fascinating, and I think between the two viewpoints, I think there's a gradual progression, right? So right now, I think the world is racing to give access to people to crypto, right? So we see exchanges getting financed and exchanges propping up locally, worldwide, which are just allowing people into the crypto economy. And the reality is a lot of that obviously is still restricted to people who have spare assets to speculate, right? Because largely anyone putting money in crypto right now wants to see quick gains, and many people don't really understand it to believe in it fundamentally. And definitely, if you talk about financial inclusion, a lot of the exchanges, how many people who are underbanked will really go and put some money in Binance or Coinbase will always be probably something we'll have to work towards. But what's really fascinating is all the use cases that are emerging that are showing us early signs of some product market fit and how this can benefit the emerging economy. So one of the stories I like to tell, which is really fascinating, is when I was writing an article recently on Axie Infinity and researching on it, I was actually speaking to the storekeeper in Philippines. And now these people are obviously living on a small wage and trying to run their stores on a daily basis. Now, these are people who are actually hooked to the Axie Infinity game, right? And are earning a decent living now through the app in a way that they're able to pay down their debts in a small way by this play to earn economy, which has really emerged in Philippines in a big way. So what's really interesting is instead of now the shopkeeper wasting time on some other app where a centralized game is getting all the attention and all the ad revenue, this is truly becoming, they're taking kind of control over their own destiny, so to speak, where they can get rewarded for the time they spend, in this kind of metaverse, so to speak. So I think some of these use cases, that we'll see emerging around gaming, around access to tokens, even high yield, right? I think some of these high yield accounts where they're getting very, very low yields and they can park their money in high yield accounts are some of the early use cases that are emerging. But yes, there's a long way to go before financial inclusion truly becomes a thing. But yeah, what do you think, Mark?
Yeah, I mean, I think I've struggled a lot with this question, right? Because I think I haven't seen historically the level of traction on financial inclusion in the US around crypto. There are Bitcoin ATMs everywhere, but you really don't see a lot of people using them. I think, fundamentally, one of the challenges, the US payment system does work quite well, and the developed world payment system does work quite well. And so I think really what people aren't seeing is how crypto is being used in emerging markets where there are a lot more challenges around currency. So you mentioned the Philippines. I think that's an example that doesn't necessarily have significant inflationary pressure. But if you think of someplace like Nigeria or Turkey or Argentina or Zimbabwe or Venezuela, you have you have countries where basically the financial system is facing serious challenges, and if someone is being paid, or even Lebanon, if someone's being paid for freelance work in those countries, if they get paid in their fiat, the value immediately starts decreasing when it hits their bank account. If they get paid in USDC or in even in Bitcoin, the value ultimately does not decrease. And I think that's actually already happening quite a bit. I don't think it gets talked about because it's happening sort of on the side, outside of the normal financial framework. I think that is actually a really important piece of financial inclusion. SDF took a stake in AirTM, which is one of the primary wallets operating in Latin America and a lot of these countries. And this is a significant use case for them, as people who basically want to battle inflation. And I think you always have to start somewhere with financial inclusion. You have to start with a significant use case where people immediately see benefit. And I think that's a big thing. I think the other thing, there's recently a great article in Rest of World talking about, people who are trying to move from Nigeria and Canada and paying school fees just through USDC, through Paxful, through peer-to-peer exchanges because of some of the regulatory challenges in Nigeria. And I think that's another example of people, basically getting financial access where they would not have had it before, and it's helping them get into the financial system. And then finally, I'll say, I think Coinbase has done, not to prop up your current employer too much, but I think Coinbase has done a phenomenal job creating this whole ecosystem that is could be considered to be your financial services hub, right? So I have a Coinbase card. I use it every day. I store value in Coinbase. And I think you can really imagine people starting to use wallets in that way, custodial or non-custodial. And in some cases where the banking system isn't there yet, you can imagine people without bank accounts actually using wallets in this way to basically, effectively use it to make payments, to generate savings yield, to do all the things they would normally ask of their bank. And I think that's very exciting. And I think that's around the corner.
Absolutely, Mark. I think those are all great points. And I think I'd like to draw parallels between the fintech economy and the crypto economy, right? So if we see Chime in the US, right, like 5 years back, no one had heard of them. And now they're the champion bank or the big challenger bank, especially on the underbank. And it's really simple, right? What they provide, I think they just provide basic access, open an account instantly, get a certain percentage of yield and basic functionality like early direct deposits and checks, and now some sort of micro lending. I think that the really interesting piece is, on the crypto side, all of this can be enabled in a very decentralized way, right? Like a Chime, someone like Chime doesn't need to be the gateway for all of these users, because I think some of the things Mark mentioned around custody, right? Like Chime is doing all the custody today, but as an underbanked, I would say like consumer who today wants to, let's say, park their money and get some yield or transmit their money back home, let's say where there's high inflation, through stable coins or not even speculate. I think now, companies like Coinbase and others are really enabling kind of this segment to do so, right? Although like there are kind of custodial models still, like they're still in the CeFi world, but a lot of the thought right now, like even if you look at, what Brian Armstrong says is kind of how do we really become more decentralized and play in the DeFi world and really give the user, their kind of, keys so that they can move money around easily wherever they want. Because even if they come to the Coinbase ecosystem today, it's still a walled garden, right? You cannot move money easily to protocols that you want and whatnot. So I think overall, the point I'm trying to make is if you start looking at emerging markets, these use cases will start emerging really strongly, where as people get more comfortable with crypto, right, and stable coins, I think another big challenge here will always remain the regulatory kind of scrutiny, where there's always be this tension between central bank digital currencies, or should countries launch their own currency versus rely on something like USDC and all, which is why I think on the other side you will see a race for stable coins trying to prove that they are very secure. You can see the recent news around USDC trying to really be more transparent in its disclosures, move money to safer assets, as well as Paxos announcing their recent stable coin where they also want to proclaim that cash and cash equivalents are the way they want to really like peg the value one-to-one. So we are moving towards a world where consumers will get greater confidence in some of these coins that are one-to-one mapped to their hard cash. And once they really come into this digital economy, I think that's where the underbanked really can get access to a plethora of services which were traditionally only reserved for, I'd say, HNIs or others. Because once you have those coins and you are very comfortable with holding them and the value is secure, at that point you get access to a whole world, right, of crypto, which wasn't really accessible before, because you having cold hard cash with you. So yeah, Mark can speak more to that, but I feel that's very fascinating.
Yeah, I think stablecoins will serve as a really important bridge currency and also a store of value, which is going to be great. I think that's useful. I think it'll be interesting to think of how many stablecoins might exist. And anyone who wants to learn more about this, I have to give a shout out to Nakul's newsletter, which you can look up on his LinkedIn. He does some amazing long posts about the state of the crypto economy, and I would highly recommend it to everyone on this call. So yeah, maybe moving on to startups, considering this is Seedstars, we are talking about entrepreneurs wanting to grow businesses in either emerging markets or crypto or both. And so I think historically emerging markets have had very concentrated market structures. Often you have a lot of winners at the top and not a lot of room at the bottom, with some exceptions. The biggest financial movement in emerging markets arguably was not from a startup, but from Safaricom with M-Pesa, right? And so I think there's a fundamental question of, can startups really make big moves in emerging markets in crypto, or will they always be hampered by regulations or banks shutting them down? And you've spent time at Venmo, you've seen this from a number of different perspectives. So I'm wondering what you think there.
I think that's a really fascinating question because, when I see this, I think, I go back to India, right? Like what happened in India, where I think when the first wave of crypto opened and until kind of, 2017, 18 happened, we had like these bunch of entrepreneurs, especially, like in WebPay, it became really large. Like right now we see Coinbase of the world, but in India, crypto exchanges were becoming pretty large in 2017. And that's where the first clampdown came. I personally got a notice from my HDFC bank saying, if you hold crypto, you'll have to sell it now because RBI has issued a strong mandate against it. And at that point, I think that just shook up the entire market, right? Exchanges went bust, consumers' confidence was shaken, like everyone withdrew their money from crypto. The fascinating thing is 3 years forward, India is one of the fastest growing economies, in terms of crypto adoption and how exchanges are doing, and unicorns coming out of India. Again, it's the regulatory stance has now eased. Like there is no clarity right now still saying that, hey, crypto is allowed, but at the same time, it's not moving towards a ban anytime soon. So I think things like those, it's one of those early things which will go through its cycles, right? Like China has tried to ban it every couple of years. So I think Mark, to your question, I think, what's really fascinating about these emerging economies and startups is that you have to be really resilient as an entrepreneur, right? Because if you're starting out on this journey, it will take a while. You may not kind of see the riches or hit those milestones. Especially like if regulatory pressure is high. At the same time, if you're very adaptable and can be nimble about it, I think there are a lot of ways you can add value to consumers, because today consumers are getting educated, right? Every 5 years we see a new wave of users coming in with crypto cycles, and that's what's going to happen. So on the entrepreneur side, what's even more interesting is now we're seeing a lot of investment on the infrastructure side. I think the access problem through exchanges is something that we see getting solved in a big way globally. But now, the next phase of this is how do you really, get each of these fintech apps the right infrastructure, which is why Paxos, others are doing such good work in enabling that infrastructure. And as an entrepreneur, I think a lot of entrepreneurs I see like every couple of weeks, when I hear pitches, I think they're around DeFi access, right? How do we make it really easy for users to plug into the DeFi world? Because today it takes 10 steps for a user to buy something from Coinbase, move it to MetaMask, move it to certain coins, yield farm, or get that yield. So a lot of the entrepreneurs are focused on solving kind of these core UX UI problems to make a lot of these things single access, right? In the blockchain world. It is one really interesting area where I see a lot of action, and the second is just core crypto infrastructure, right? Like how do we enable all these fintech companies to start having API as a service for various crypto trading and other things. And obviously, I think overall, we see Polygon emerge from India, right? Like a great L2 solution, which now has really kind of taken over, the world in terms of how we really start thinking about Ethereum scalability. So a lot of interesting ideas are coming from emerging markets, right? And we will see in each of the crypto stack, emerging markets entrepreneurs playing a very strong role to add value to the users.
Yeah, I would agree. I also think there's a lot of room where you think of them, if you think of it more from a bottom-up sort of scenario, where you're talking about where the market is, rather than a top-down looking at what the banks are doing, what the regulators are doing. There's just a lot of room where the folks are not being served by the traditional financial system. And I think within that, there is opportunity. And I think I've seen a lot of interesting startups around helping people pay in cash, but then actually have merchants receive funds in crypto, for example, or obviously cross-border. I spend a lot of time on cross-border, and that's an existing installed base market that is needs to be served well. And then of course storing value in DeFi, like you're talking about. There's always a demand for doing that, and then providing services or providing enabling services to a neobank that wants to get into crypto is always very useful. And actually, on that point, you mentioned DeFi. I'm curious, where do you think things will go for frontier markets where people are generally very new to this, right? I think we've been hearing about Bitcoin for a while, but in a lot of markets, people have not necessarily been hearing about it. Um, you know, the non-custodial wallet in the DeFi wallet is very enticing. It's very, interesting to imagine that actually taking off. But there are obviously usability concerns with some of those non-custodial solutions. And that's why, for example, Coinbase has done very well with a custodial solution where they hold the keys, they hold the funds. People don't have to worry about losing something and losing all their funds. And I'm just wondering, how do you see that shaking out over the next 2 or 3 years? If you're an entrepreneur, you're trying to figure out what to start. Like, is it worth figuring out the UX and all the user issues around non-custodial to take advantage of DeFi, or is it better just to do something very simple and custodial like Coinbase?
I think the reality of this is gaining consumer trust and adoption is really hard, right? So I try to, obviously not discourage B2C plays here, but at the same time, like if anyone is trying to create a, consumer facing DeFi play in terms of a DeFi wallet that's like largely based on the value prop of high yield, I think that remains very challenging for entrepreneurs still, because a lot of this is, still driven by exchanges and others, where I think you have two sets of users, right? So one, your crypto, which we call like crypto curious or crypto native users. So I think the more crypto curious users, will probably lean towards, let's say the grayscales of the world or an index fund, right? Like they want exposure to DeFi, but would want it in a very simple, de-risked way. Or like the wealth fronts of the world are emerging in crypto, right? Where you can now start micro saving or parking your money, in a more robo-advisor way into crypto, where let the platform decide the right allocation mix for you depending on your risk appetite, right? Like we see Titan recently release its DeFi product, or its crypto investing product. So we'll see more and more of these platforms, trying to cater to the crypto curious, right? So if you already have an install base, if you're already doing well there, or you can build infrastructure for that, is a really interesting play if you're an entrepreneur. Now the other side is the crypto native play, where these users are already kind of deep in the crypto world and already on multiple wallets and moving money around. I think that's where a lot of the technical folks, like if you're learning Solidity or playing around with smart contracts, you can really solve those challenges in a big way, right? Like for example, one of the biggest challenges with MetaMask today is how do you get your fiat in, right? Like if you go to MetaMask and try to buy from there, there's just Apple Pay and it's $250. So you'll have to go to another wallet and put money in. I think entrepreneurs who are solving for this access, right? Like how do we think about the fiat and crypto rails? How do they intersect? How do we scale these solutions, to become faster? What we saw with Solana. So I think those entrepreneurs, which are, I think more crypto forward, are obviously going to solve a lot of these complex problems, which I'm really interested in. But on the first side, the crypto curious side, I think it's always going to be challenging because a lot of these bigger players have already the installed base for it.
Yeah, that makes sense. And so we have a couple of questions here, and I know, Nakul, we're losing you in about 3 minutes. So I want to make sure to throw this one question your way. Miguel asks, how do you see the evolution of DeFi for mainstream companies, and how do you see the use case evolving? I'm wondering if you have any take on that.
Yeah, I guess for mainstream companies, they will want to abstract away anything around DeFi. Like the consumer doesn't need to know about DeFi. I think what they will do is essentially offer high yield value props to consumers, right, based on certain actions. So for example, if you're a user who's already got Ethereum, you can stake it with us, right? Like we will do the magic behind the scenes to move it to, let's say, Aave or Compound. Like the user doesn't need to know about these protocols. So I think in the mainstream case, high yield accounts are kind of, the wedge driving this. And I think over time, as we get more evolved, I think some of the, kind of, benefits that DeFi brings in terms of giving loans, as a user, you can go on an app and then get a loan through smart contracts on someone else at a fraction of the cost. And these are highly programmable. These are highly, composable. So it's really easy for you to kind of do micro payments or manage your loan portfolio would be kind of some of the other use cases emerging, right? And all of this, will be pseudonymous, based on reputation, could be based. You don't need to kind of KYC right? Like you can build your reputation on the blockchain, but yet all of these will take an arc to happen. But the first use cases we start seeing will be based out of high yield, which will then go into lending and borrowing, which will then get further advanced, I think, in the remittance and other spaces is the way I see it. But of course, I think Mark, I would love to hear your thoughts as well.
Yeah, sure. I mean, I think there is this near-term opportunity around the yields available in DeFi and there being a bridge from traditional companies to basically give mainstream users access to those yields. And I think I've heard the phrase recently, CDFI, like basically combining the centralized finance of a custodial account, which is really what you use in most banks or neobanks, with the DeFi giving access to that. And I think there's probably a near-term opportunity. I wonder how sustainable some of those yields are, because it's effectively taking advantage of some of the fiat in and out fees and some of the the other friction in the system, right, where people don't want to actually cash in and out. So as that gets cheaper and cheaper, things get more efficient. I wonder how sustainable that is, but I think there's a little run left, and I think it's a great accelerant for getting people into the ecosystem.
Yeah, I think the whole value prop is just disintermediation, right? The idea is there's always a middleman earning a fees and then deciding how much APRs you get because you haven't got some sort of credit history. I think building reputation online and it is going to become even more interesting, right? So I think I am just fascinated about those concepts. Again, P2P markets haven't done well in China, right? We see how some of that P2P lending imploded, but I think blockchain can probably solve some of those core challenges why that didn't work out without any kind of digital
I see, because there's more transparency on what you're doing transaction wise, and so you can actually build credit worthiness. And yeah, that's actually really interesting. I think that whole space of trade finance through DeFi is really interesting, because right now DeFi is primarily being used for personal savings and personal yield, but when we get into real world capital flows, which is sort of what Stellar is focused on, I think that's where things get really interesting, and I think that's the next wave here.
Absolutely. So as an entrepreneur, if you're looking at kind of how do we bring the right kind of underwriting models in the DeFi world, how we think about insurance, I think those are some of the most important problems today, like in my mind, that we can solve, right? Because those are, I think, really challenging, but the blockchain makes it really transparent and also kind of easy to trace provenance, and that's where a lot of the interesting stuff is also happening.
Yeah, that's great. And I know, Nakul, you might have to go, so you feel free to drop off, but I'm actually going to stick around and answer any other questions people might have. And so I'll start with Tim's question here. Do crypto wallets and anchors need to be regulated by local authorities? And a specific use case question, can Lebanese people open a crypto account and receive USDC through the Stellar network? How can they withdraw in Lebanon, right? So two different questions. I think this is a fairly Stellar specific question. So for those who don't know, Stellar is a network for moving money around, and on the edges of the network where you get fiat in and out are licensed entities we call anchors, who basically enable you to put fiat into the system, solving that problem that Nakul mentioned about MetaMask, basically not there being a lot of friction getting fiat money into the system. And the short answer is yes, they do need to be licensed by local authorities. We at STF spend some time making sure that we are comfortable with the anchors that we support being licensed. Of course, anybody can set up an anchor, but we have a way on the Stellar network to have people share their licensing status and their attestations if they do stable coins, to make sure everyone's aware of what is available. And so the idea is that there's this bridge with the fiat network. And so that would be the situation if we had an anchor in Lebanon. I don't think we have an anchor in Lebanon right now. And so I think the short answer to your question is there's not a direct way to load USDC in and out of Stellar in Lebanon. However, there's probably several indirect ways to do it through peer-to-peer marketplaces like Paxful and others. I'm sure you can find a way to buy USDC. There's also exchanges that currently support Stellar USDC, like Liquid. And so to the extent they have availability in Lebanon, I think that would be possible. Wire is one of our biggest fiat on and off ramps. Unfortunately, they're not active in Lebanon right now. I just looked it up. So, I think that's an area that we, on my team, spend time on. We recruit anchors, and, we would be the ones looking for someone in Lebanon to help out with that. Any other questions? And by the way, I think you can actually go live if you want to, if I understand correctly, by raising your hand. Do I have that right?
Question, and if you don't feel like typing, please raise your hand. And yep, I see. 1 second, it's Timothy, right?
Yep.
Okay.
Hey, Tim.
Hello. Can you hear me?
Yeah, I can hear you just fine.
Awesome. Thank you for the answer to the previous question. So the reason I'm asking this is I founded a startup that enables diasporas to mentor, collaborate, and fund startups back home. So it's pretty much in line with Next Billion Advisors.
Great.
One of the features we're trying to enable is to allow diasporas to fund startups in the early stages back home. So startups in emerging markets often lack that angel or that love money, those first 30 to 50K. We want diasporas to be able to provide that through a crowdfunding system, which is why the Stellar network is so interesting to me, and which is why I asked that question before. But so just to come back to anchors, does the Stellar network kind of have requirements for an anchor to become an anchor, or can anyone become an anchor regardless of their KYC AML protocols?
Yeah, it's a great question. So first of all, the Stellar network is a permissionless network. So really anyone can set up on the network. Anyone can actually, start operating on the network. And there's a DEX that's built into the network. So you can actually start exchanging immediately. You can even issue a stablecoin yourself on the network. So that's all possible without any, you don't need to go through any paperwork or anything to get that up and running. It's all open source, and you can go on to developers.stellar.org and see how to do that. I think the distinction really is in the level of sort of visibility and the level of adoption. So generally, when folks actually share their licensing status or share their attestations, people are generally much more comfortable with going in and out. And, the SDF is really dedicated to supporting the network. And when we actually support the network through what's called currency grants, where we actually give grants to anchors and others on the network to encourage, use of digital assets. In that situation, we do extensive due diligence, and then those companies where we do extensive due diligence, we then support financially as well. And so often through that financial support, those companies grow and they basically get a lot of utilization on the network. And so I think it's it's interesting because it's actually both are true. It's an open network where anyone can become an anchor, but a lot of the scale anchors are ones that actually have licensing and solid attestations because a lot of them basically have gone through the process of licensing, and in some cases there's financial support from us and elsewhere. Does that make sense?
That makes sense. If no one else has any questions, I'd love a follow-up. So you mentioned that anchors had to be kind of regulated by local authorities. How is the Stellar network planning on kind of foregoing, so to speak, hostile government? So how are you going to make Stellar available, or the Stellar protocol available for Venezuelan citizens to receive USDC from abroad if anchors have to be regulated by local authority?
Yeah, it's an excellent question, and I think that's where there's always going to be a case-by-case situation where first of all, I think the individual anchors have to decide what they want to do. I think that's the first step, right? What is the path for getting fiat into a digital asset in a local jurisdiction, and does that path exist, right? And I think in those governments where there's a lot of volatility or where they're actively hostile, I think the anchors then have to decide what their best strategy is. I think in some cases, a lot of anchors are basically using peer-to-peer networks, right, to actually enable this because there simply is no license available. There is no license path available. And so using a peer-to-peer network is the only way for people to access something like USDC, right? And I think in Argentina, for example, there is actually a way to. It is both a country with high inflation rates, and there is a way to store digital assets, right? And so I think that's another scenario where there's a path available to an anchor to be licensed properly and also help the end users. I think ultimately what we're seeing as an open source network is we're seeing a lot of innovation, and I think people can actually find other paths on the Stellar network without necessarily the SDF's support to basically build. And I think that's what we saw. For example, I think AirTM is a great example of that, right? We recently invested, but prior to that, AirTM was doing a great job of bringing people into crypto, which I think is a good thing. And so I think there's really a case by case situation there.
Okay, thank you very much.
And feel free to send me, and anyone can feel free to send an email to partnerships@stellar.org or to me directly at mark@stellar.org if you have any more specific questions about Stellar or want to work with Stellar in some way.
Thank you so much, Timothy. And in the Q&As, we have 2 more questions.
Great. Yeah, so let me start with Grace. So let's see, it's quite a long question. So Grace, feel free to raise your hand if you want to ask it live, but I'll see if I can do it justice here. Crypto remains fairly controversial. Many governments do not have regulations. Can you provide some insight into ways the government have embraced crypto fintech solutions, digital walls, or how crypto fintechs have self-imposed comprehensive compliance standards to allay perceived high-risk mentality of many investors? Yeah, I think this is a great question. I mean, I think crypto has generally gone through an evolution, and I think people's perception of crypto has also gone through an evolution. So you sort of had this, both things happen at the same time. And so, I think here in the US, the infrastructure bill has been a prime example of that, where you can see the government try to, and Congress specifically, try to understand how to regulate crypto, but at the same time, you can see a lot of the U.S. crypto players be open about how they would love to have some clarity around regulation, right? So I think both sides are coalescing in the U.S. I think in other countries, there's also a similar dynamic where the central banks and others are actually trying to understand what's happening. I think the primary ways the governments have embraced crypto solutions is, first of all, I think they've enabled and allowed digital wallets, and using things like the travel rule and KYC requirements, try to make sure that they avoid the things they're primarily worried about, which is often money laundering and terrorist financing. They try to ensure that is something that is at least trackable and traceable through these digital wallets. And so you can actually have all the benefits of crypto in terms of immediate settlement and people being able to hold value even if they don't have a bank account, while still avoiding the some of the things that governments are worried about. I think some of the other risks, quote unquote risks, that people are worried about is really in loss of principal, right? Like, you invest in crypto, the price crashes, you didn't understand what you were investing in. And I think that is actually quite separate. And I think that is a whole separate topic and question, which I think is, something that is, emerging around consumer protection that people are thinking about a little bit. But ultimately, I think that is quite separate from the primary concern that I've seen, which is around money laundering and terrorist financing. I think ultimately, the second way governments are embracing crypto is around CBDCs. So I think people are seeing that central banks specifically and treasury heads are seeing that you can take advantage of crypto for your own purposes in terms of managing the money supply. And that is something that we're seeing explode around the world. And I think ultimately the appeal of CBDCs will hopefully be quite significant for these these governments to really embrace crypto. And I think we have one more question here that I'll cover, and then I think we'll wrap if there are no other questions. How do you see, this is from Nicholas, how do you see stablecoins coexisting with CBDCs in the future? More broadly, do you think the relationship between CBDCs and crypto will be one of competition or cannibalization? Yeah, this is an excellent question. So we do, at Stellar, we do a annual conference called Meridian. It's coming up in November. It's free. Everyone's welcome to sign up. And we usually have a session on CBDCs versus stablecoins because this is a hot topic and stablecoins play a very big role on the Stellar network. I think effectively stablecoins are, are private asset-backed currencies that basically give you the experience of using a digital dollar, a digital euro. And, I think there's an outstanding question of whether CBDCs will actually take over these stablecoins. And I think it's really a question of market structure. So fundamentally, do central banks want to be in the retail finance game? If you think about it, right now, that is not the way the Fed operates. That's not the way a lot of other central banks operate. They generally support other private banks in then interacting with their customers. And so, I think we'll see how this shakes out. But I can imagine a situation where, we have, CBDCs playing a very big role in sort of a wholesale environment. There being an opportunity for it to be used in a retail environment, but there also being some structure where stablecoins can coexist with CBDCs and are, presumably supported and even maybe regulated locally by governments so that there's a high degree of confidence in stablecoins. And so I could actually see them coexisting going forwards because they serve slightly different purposes. Ultimately, I think the question is how much innovation will there be within the private versus public space? And I do think that there's be a lot more innovation within private stablecoins because they can take advantage of a lot of the unique features, that are provided to them on the layer one chains. And I think that's what's going to be interesting as this develops. That's great. I think we might be through the questions. Anybody else have a final question before we wrap?
There is one question in Q&A from Timothy, and also I saw that Grace was raising hand. So if you still want to ask a question, let us know, please.
Why don't we go to Grace?
Yes, I have invited you, Grace. Please join the stage.
Hi, can you hear me?
Hello.
Hi, Grace.
Thank you for answering my question. So I work on the government impact investing side, and we do get a lot of, grant applications with regard to crypto, like startups. And so that's why I was asking more about like compliance issues, crypto still being unregulated in most countries and central banks not really having a formal policy on crypto technology. But the thing that you mentioned about consumer protection, how they're like two separate things. The thing that becomes like a big issue for us is people losing their value, right? Like what happens when a crypto wallet company kind of goes under, or and how do these people, how are they able to like reclaim whatever value they had stored? And so I don't know, like I'm not a crypto expert, and that's why I joined this call. To be honest, I feel like I'm way over my head. I was frantically trying to keep up with all this conversation that you had with Nakul. And I think I'm gonna have to go back and like read some of his like blog posts to kind of, be on par or try to understand all the things that you have discussed. But no, I just wanted to thank you for answering my question and making yourself available for conversations like this.
Yeah, and I'm happy to follow up one-on-one, and feel free to reach out to me if you want to just talk more specifically about the questions that you have, because I definitely take your point that it can be quite overwhelming initially. And I think Stellar actually hires a lot of people who are new to crypto, and we call it sort of a 2-month ramp up where you're just sort of trying to understand everything that's going on. And I think that is because Stellar is really focused on building a bridge into the fiat world. So, but I think I can help you out with a couple of very specific things. I mean, first of all, I think there's a distinction between what's called custodial and non-custodial wallets. And so the non-custodial wallets are literally where the wallet is not custodying any funds. In other words, someone is basically, keeping their what's called secret keys, which is effectively their password. And even if the wallet goes under, those funds are still available to them because the wallet never had access to those funds in the first place, right? You just think of it as like you're operating a storage locker system, and everyone has their own lock for the storage lockers, and so anyone can get access to stuff, anyone, no matter what. And so I think if you're dealing with non-custodial players, I think generally you're in good shape because there's no way the company can ever raid the customer funds. If you're dealing with custodial players, obviously there is that possibility, someone like Coinbase, for example, right? And so there's a big branding and trust element, just like in a neobank or a bank. But that said, I think what a lot of people are doing now is using a company like Paxos, which Nakul mentioned, which is the larger company, to actually manage the customer fund. So you can offer the quote unquote custodial experience, just like you might offer, your company might use Gmail to do host emails. So you're basically getting someone to do the hosting that's very, very reliable without anyone worrying about whether the company is going to survive, because they know they'll always have access to their funds, even if the company goes under. So I think those are like two very specific things you can do when investing in companies to de-risk customer loss due to the company going under. So I think that's probably what I would look at and read about.
Great, thank you. Yeah, I may take you up on reaching out to you.
Yeah, happy to help however I can. Sure. And let's see, Tim, you're back. How would you recommend looking for Stellar developers, CTOs willing to build new startups, focused on using the Stellar network? Yeah, actually, there is a Discord group called Stellar Global, which I would recommend. There's also a Substack and Keybase group. So if you go to developers.stellar.org, you should be able to access all of those. And I would simply post your project. I think the other thing I would recommend is, if you have a project that's building on Stellar, then there is a Stellar Community Fund, which basically allows you to nominate your project. And then, effectively other people can see it on the website, and then they can attach themselves to it. And you may also be able to get financing through Stellar, because there's actually a fund. And it happens through voting. It's a very decentralized process where the SDF does not necessarily choose these, but the community itself decides what are the most promising projects. And so if it sounds like the kind of thing you're focused on might be a good fit for the community fund. So I would look that up. Let's see. And I think I see a question here from Chris in the chat. What other resources would you suggest? Any other resources for people eager to learn more about crypto and blockchain for emerging markets? Yeah, I would say look up Nakul's newsletters. I think you could just look him up on LinkedIn. And I think the other thing I would say is there are a number of great blog posts on stellar.org, which are very specifically focused on emerging markets. I think that's a good way to understand generally what's happening. I would also highly recommend some podcasts that actually basically cover crypto specifically. And I think the one that I actually spend most time on is Unchained and Oddlots from Bloomberg has some great podcasts about crypto. And Slate Money just recently had a great crypto podcast. And the great thing about those latter two is they're really geared to the non-crypto community. And so if you're ramping up, it's a great way to start from the basics. Yeah, Luminance for sure. That's a great thing specifically about Stellar. All right. If nothing else, I think we're a wrap. So I really appreciate everyone hopping on. And let's see, anything you want to say to wrap up, Serena?
Yes, of course. So thank you so much. First of all, Mark, thank you so much to you. And of course, huge thanks go to Nakul. I think this was a very insightful conversation, and I hope the audience found it very useful. Just before we go, I wanted to share with you all that next month, so in September and in October, we at Seedstars will be hosting a series of webinars on raising non-dilutive capital. These dates might be changed, but please feel free to drop your email addresses in the chat if you want to be invited to these webinars, and my teammates will invite you for sure. And one more thing, if you want to join Seedstars mentorship platform, or if you have any questions regarding today's events or the upcoming events, please feel free to mail me. I'm always online, so this would be something great. Okay, so thank you so much, Mark, once again. Already I see some extra messages, like external messages from my teammates saying like, wow, great conversation. So just sharing with you this feedback. And so thank you and take care. See you in our next events.
Okay, thanks everyone.
Thank you, goodbye.